Hi Dave, it's Jason here from Positive. Hey listen, today I want to talk to you about something that over the last 15 years as a professional property investor and coach, coaching thousands of people when it comes to building property portfolios, real estate investing, people are confused about the types of properties, their strategy, their action, what do I do? And today I want to talk to you about what I've discovered over time and maybe chuck a few questions out there for you to ponder over, pontificate over the weekend, thinking about if you're serious about property and property investing, are you going to be a property investor or are you going to be a property trader? Often people get confused thinking they're the same thing, and they are absolutely 100% not the same thing. Very, very different behaviours, very different attitudes, very different properties. Very different risks, time costs and understanding if you are an investor or you are a trader, property trader. Let's have a quick look at that. If you're a property investor, time. How long as a property investor do you own a property? I'm listening here. Put it in the comments down below. You own it forever. Seriously guys, this is the thing that I see most people do. They fail as property investors because they get 2 years in and they go, oh, it's too hard, I'm giving up. Number one, if you are an investor, you buy it, you keep it, you own it, and it turns into passive cash flow in your future. Forever, you own it. That's what you do. You own the thing. The cost. In reality, the cost of an investment property, buy and hold forever property, is actually quite low. Okay, it's a very low cost. You can borrow up to 95% in some cases, 97% if you're a first homeowner that's going to turn into your first investment. Very low cost to get in. You buy it forever, low cost to get in. The risk, in reality, it is a very low risk as well. Owning a property for 1 year has a heightened risk. Owning a property for 20 years, the risk of it not performing is lowered every year you own the property. The longer you own it, the lower the risk. And the knowledge to buy an investment property is not massive either. It is not low, it's certainly high amount of knowledge to buy the right property at the right time in the right way, but it's certainly in comparison over here to being a property trader. What's a property trader? I'm going to buy a property, I'm going to renovate and I'm going to sell it. I'm going to buy a property, I'm going to do a subdivision and I'm going to sell it. I'm going to buy a property and I'm going to develop it and turn it into a block of apartments. And I'm going to sell it. That is a property trader, and really, they're not really in property, they're actually in business. They have a business that uses property to create income or cash flow. Very different beast, very different thing. The time frame for this person who wants to be a property trader to create cash flow is short, usually 12 to 24 months. And when we have a shorter time frame, the risk is high. In a short, constrained time frame, the risk is high to get it right. We're running a business now, we're not, oh, we can own it for another 10 years and let it ride out. No, you've got a different type of lending, you've got a different outcome, you need to sell the thing. You're in business, you've got to understand profits and margins and builders contracts. A whole different ball game. Cost is high. The cost to get into being a trader, buying and selling, often if you're doing duplexes or subdivisions or developments, is really, really high. Lending is hard. You might get an 80% lend if you're lucky. Most likely a 70% lend. Over here, 90%, sometimes 95% lending. Property investors own it for a long time. The cost is low, the risk is low, lending is easy, knowledge is high. Over here, the knowledge required to be a successful property trader, again and again and again, is extreme. Extremely high. You need to understand profits, you need to understand business, you need to understand taxes, buying and selling in the moment, you need to understand margins, you need to understand development contracts, agent selling fees, the lot. It's very, very complicated over here. But if you want to be a property investor, understand these are the basics in your mind. Over here, property trader. You're not really in property. You're actually in business using property for income. So there you go, guys. Something to think about over the weekend. Which one are you? Are you a property investor? Buy and keep it forever, passive cash flow, pay the debts off, have some wealth? Or do you buy and sell because you're running a business which uses property? Well, there you go, guys. Hopefully it was useful in Facebook Live. In the feed or in the header there is maybe if you want to find out more about this stuff, come along to one of our property information nights. We've got one in Brisbane next week on Monday, and we've got one in Sydney next week on Monday as well. Have a look on the website. I've put the link there for you. I'd love to see you. We could spend another hour and a half talking about, are you an investor? Are you in business? What does that look like? And so on. So there you go, guys. Before that falls down, have a good Friday. Have a great weekend. And chat with you soon. Take care.